a number of geopolitical trends impacting the global economy. Many of them, I would say, are really a lot to do with uncertainty and surprises. After we saw 2016, not only the Brexit vote in Britain, but also the election of a rank outsider and President Trump in the United States, we've seen just in the last several weeks a significant turmoil in terms of expectations around the European environment. Not only have we seen the likelihood of secession of Catalonia in Spain, we've seen the election of a relatively young 31-year-old millennial into the Austrian government, and also just today announcement in the Czech Republic having appointed a quite right-wing person to their government. So there's still a lot of dynamic and backlash that's happening in the sort of construct in the political environment in Europe. And of course, this week is the 19th Congress meeting in China, and clearly some of the expectations around what President Xi will be saying around innovation and China's role in the 21st century will be quite critically important in determining geopolitics, but also what the implications for the global economy. So China's growing role over the last few decades has been one that has been largely characterized by investment. And I don't just mean foreign direct investment, which has been a clear imprimatur of the Chinese agenda, but also their focus on trade and also borrowing and lending actually into many emerging markets, but also developed countries. So for instance, China today is the largest foreign lender to the United States government. In many countries across South America, Africa, and Asia, China is the leading trading partner, but also a significant foreign direct investor, not just in commodities, but in logistics, in banking sector, as well as retail. I would say it's too early to say that the United States is completely withdrawn from the global agenda. Clearly, there are many concerns around the announcements and proclamations around the Paris Accord and some of the statements that have come out of the White House and the U.S. administration vis-a-vis trade with NAFTA and some of the other traditional global institutions from the United Nations, NATO, etc. But I do think that there is a space that has been created for other countries to take on a bigger role in delivery of public goods around the world. So China is just one example of that, but I do believe that the Europeans, particularly France and Germany, are also taking a second look at the political environment and their roles and responsibility, not just for Europe, but more generally around the world, which is something that the United States has done quite considerably over the last 50 years. For example, policing the sea lanes and being a leader in some of the big multinational institutions. One of the things that I think people find particularly interesting is that we've seen a considerable run-up in the stock markets in the United States, but also in many other countries around the world. And I would argue that a lot of the people who remain bullish are focusing on a very big reform agenda, which has been proposed and promised by President Trump. This includes tax reform, infrastructure investment, repatriation at a discounted rate for many corporations. Unfortunately, a lot of that was initially hitched to the healthcare agenda, which as we know, stalled a few months ago. Obviously, to the extent that the VIX, which is a measure of the volatility, remains considerably low on a historic basis, and there's still very good, strong earnings numbers coming from many corporates, I think the story around this bullish trend that we see in the run-up in the stock markets will continue. And of course, that means that other asset classes, alternatives, but other asset classes in other regions also, I believe, will continue to struggle somewhat. The oil agenda, which we know is not just about supply and demand and the economic side, but really has seeped into the geopolitics, because a lot of the oil producers are in the Middle East, Russia, etc., places where there's a lot of complicated political dynamics, is one that we need to watch very carefully. On the one hand, you could argue that the advent of shale and fracking mean that there'll be less dependency on many of these very volatile, largely non-democratic in a sort of liberal democratic sense places, and therefore this should be good for the oil agenda, and specifically it should be good for geopolitics. On the other hand, I think it's too early to say what might happen in terms of the shale agenda. I mean, there are very promising indications that this could be revolutionary in terms of the geopolitical environment. But on the other hand, we are seeing a lot of challenges to, whether it's environmental challenges, but also political challenges within the United States vis-a-vis the ability to deliver on the shale expectations. So I think that the jury's still out, and of course another aspect of this that makes it even more complicated is that public policy seems to be somewhat shifting against traditional fossil fuels. And we've seen in the United Kingdom, for instance, they've already announced that they are targeting 2040 to try and scale back on the dependency of fossil fuels, so then potentially implement bans on oil-driven cars. We know that the advent of electrical vehicles also could be a significant impact in terms of the oil markets. And of course, China, also a very large user of fossil fuels, has also started to speculate about shifts, largely driven by environmental concerns, away from fossil fuels towards other sectors. So, I mean, it could potentially be quite revolutionary in terms of what happens to many oil-producing countries, but I think at this stage it's still very much in a dynamic sense.